This is Greg McCloskey with a Forex commentary for FX Street. Taking a look at the euro as it battles between the bulls and the bears. Let's start by taking a look at the euro on a daily chart. And what we've did this week actually was move through the 38.2% retracement. That's of this move up from the high, or moved down from the high reached in May. What is that? In November of 2009 down to the low that we reached in June of 2010. 38.2% retracement comes in at 131.24. If I zoom in here, you can actually see here how the market moved above that level on Monday and continued the surge yesterday, moving up to a high of about 132.61 yesterday before coming down here today. We have been able to stay above that 131.24 level. Needless to say, that's going to be a key level for us going forward. The low for the day is coming in 131.30, so we are finding buyers against that old support level. Now, I did have this line here, 132.67-ish type area, and that line comes in because back here in the month of March, the market came down to a low of 67. It came down to a low of 67 on this day when the market rebounded back to the upside. The low was a little bit higher at 82 at this point, but you can see here that we found the buyers against that level that forced the market moving to the upside. When the market started to move back down here, however, you can see found support there, broke through, used that level as a resistance, had a few little moves up and down here before breaking and really taking off to the downside here. So I consider this a 67 level a key level for the euro versus US dollar, at least a level that the market has to get through. A borderline level is what I call them, that has to get through in order to move further to the upside. If we're able to get through that level, we could head up toward this upper trend line at 134, 134, what is that, 42, 43 type area, or even to the 50% retracement of that same move to the downside. That's from the November high to the low. That 50% retracement comes at 135.10. All of it is predicated on the fact that we're going to need to get above 132.67, and right now with the market down, near over 100 pips below that level, 131.55. We need to move on to another chart to see what that chart is telling us. So we go to the hourly chart here, and what we saw here off the hourly chart is that the market moved. Broke out of this range here. We had some tops here, a ceiling here that became a floor over the last couple days here for the euro versus the US dollar. That came in at 131.84 type level, and that level is going to be a key resistance level as well to the top side. Now on the downside, what we ran into as support is the 100-hour moving average. The market came down, tested in this hour, tested at this hour, tested this on this third hour right here, and each of the time the market found willing buyers against that level, and the market has moved up. Now it hasn't moved up a lot. We remain below this 131.84 level, and that keeps the bears, who may have sold on the break here, somewhat in charge. But they get impatient, especially in the fact that this is a trending market to the upside. And anytime the market trends to the upside, it tends to get those people who sell tops, who try to pick the tops, in trouble. Why? Because the market just continues and comes back in their face. So expect that we may continue to see some buyers against this 100-hour moving average. But if it does break through that level, look for sellers through that level with possibly a test of this 200-hour moving average. This 200-hour moving average is on an upward sloping trend, and it may come in around this 103, 136.65 level by the time the market moves its way to that level. But that's all, again, contingent on the fact that the market is able to get through this 100-hour moving average, and so far it has not been able to do that. The bulls almost are in more control here on dips. Sit there, buy against a dip, and see what happens up here at the 31.84. Taking a look at the 5-minute chart, see if there's any clues from that. It becomes clear here at the importance of this 131.84ish type area. We have a low here, we have a low here. We broke through that level here, really took off to the downside. What what's also significant here is another interim level here off the 5-minute chart from our intraday perspective coming at 131.67. We had the market reach a high here, move down to the lows, come up to that same level, come up to the same level, and now we're moving back up again toward that level. You can see here that it was a floor here for a while here, going in yesterday's trade and the day before's trade. So there's some significance as far as that goes. So. You know, the bulls and bears are battling it out here. The market was non-trending for a few days. It made a break to the downside, found the support against what was obviously support with the 100-hour moving average, and now has to figure out, okay, which way does it want to go? Does it want to go higher? In which case we're going to get above this 82 to 84 level, or does it want to go lower and move below our floor down here at the 131, 32, 30 to 32 type area on the downside? In between here, it's battle royale for the euro versus US dollar, with the bulls and the bears fighting it out to see which way we're going to break. And so pay attention, be aware, be prepared. Let's see what the action brings over the next 24 hours. This is Greg Michaelowski on behalf of FX Street with a Forex commentary on the euro versus US dollar.